If you want to invest in crypto, you are probably thinking about how to choose the most profitable project or coin. But having experience of already over 6 years in crypto, having lost over $500,000, and having earned capital several times more, I guarantee that the real task of an investor is not to lose their money like 90% of beginners do. If you want to be 1 out of 10 who make a profit, the only way is to really understand how to tell the difference between a decent project and a scam. If you want a magic pill and a simple solution to what project you should invest in, then this video is not for you. But I have 8 holy points that every investor must check a project by. That knowledge cost me over $500,000. My name is Ivan. I'm an investor and a businessman. I have 6 projects in crypto, IT, and artificial intelligence fields. And while I am working right now, my digital clone is recording this video for you. I personally double-checked all the information. The future is already here. Number 1. Who of the big guys have come into this project already? I always find out which big funds have already invested. This allows me not to spend a lot of time figuring out other circumstances because large funds have separate divisions that look for the most promising projects and vet them. So if they are risking money, it's a good sign that you can go along with them. On a separate note, ideally meet the investors or founders of the project in person and talk to them. For example, I personally communicated with the founder of the Ethereum project back when no one knew about it. I invested a few $1,000s and made a profit of hundreds of thousands. The story of how I later lost $500,000 in crypto and how I was able to increase my capital several times again will be on my channel soon. So pay attention to who invests in the project, whether there are funds among investors, especially top funds. But which ones are the best? Pay attention to the following ones: A16Z or just Andreessen Horowitz, Sequoia Capital, Paradigm, Framework Ventures, Binance Labs, Coinbase Ventures. Why these particular funds? Because they have been in the market for a very long time, they have successful cases, and they have market makers, people who are literally changing the market for crypto. I will tell you more about them in a moment. By the way, I just gave you for free the kind of information for which normally a good fee is charged. So I would appreciate it if you give a like to this video and write any comment. And subscribing to the channel will help you not miss the second part of this video with more in-depth analysis. Second point, does the project have a guardian angel? For a crypto project, such an angel is a market maker. So is there a market maker with that fund that invests in the coin you want to buy? I will now explain who a market maker is. This is going to be a bit complicated, so I will give a simple example first. Let's say you open a bank. You have got money and you are not a scammer. But people are seeing your bank for the first time and no one comes into you or trusts you. How to get out of this vicious circle? You take $1 million and give 10,000 each to 100 of your friends, family, and so on. They come to the bank, make deposits, and you pay them interest. Others see that your bank is full of people and come to you too. The market maker is doing the same thing. By buying and selling a particular cryptocurrency, they make sure that the flow of money doesn't stop. Just as the heart pumps blood, market makers move cryptocurrency on the market. A market maker is a company that works with the help of bots and uses artificial intelligence. They place bids to buy and bids to sell, setting a fair price, the spread. Every market maker has a different price range in which they operate. When there is a sharp move in the market, it means that market makers exit the market, no longer controlling it. A market maker earns a little bit at a time, but always. Between 50 and 90% of buying and selling are the work of market makers, that is, artificial purchases and sales, not exchanges by real people. This is a necessary condition of the market so that the whole process does not stop and the price does not rise or fall to extreme values. It is easy to figure out a market maker. They work with one standard amount. If you see a particular coin being sold and bought in roughly the same volume, that's the work of a market maker. You can also pay attention to whether the coin you want to invest in has many transactions during the day. If a market maker is working with it, that's a good sign for an investment. I also always use the Dropstab site. You can find the most detailed statistics about different projects there. Let me know in the comments if you need a video on how to use it correctly. If you realize that the project is of interest to serious players, the third point of the checklist is the question of who creates the project. Is the founder just an enthusiast, or is there an experienced businessman on the team who is interested in the growth of crypto? And what will this crypto project be like in general? Let me explain. If you compare it to the real world, imagine a friend of yours opens a grocery store and another friend opens a computer store. If your neighbors have money, there will be customers at both stores, although the grocery store will have them every day and the computer store once a week. But when people have less money, the computer store will close, whereas the grocery store will stay afloat. So it is in crypto. Coins designed with the widest possible functionality that everyone needs are always highly valued, and they often go up in price. And coins with narrow functionality from enthusiast developers are unlikely to skyrocket in price. So you need to thoroughly understand the project itself. What is its technology? What exactly do its founders do? What do they make money on? For example, the Tron blockchain is a project that was created for entertainment app developers. The project earns more than $1 billion a year, but that happens thanks to internal transactions, so they don't work on making the price of the coin itself go up. So buying Tron in hopes of reselling it for a significantly higher price is obviously a bad idea. Therefore, find out in detail thanks to what the project will earn, how quickly you can earn, and what risks you may run. Remember that money doesn't fall from the sky. Don't treat investing like a casino game. Your job as an investor is first and foremost to match risk with possible reward and to have a good understanding of what you are doing. The fourth point on the checklist: is there any fuel left in the project? Fuel is the faith of other investors and funds translated into the money they invest. It's the fuel in a spaceship traveling to distant stars. If it's drying up, the project has been in development for a long time, and there are no additional investments, it's a bad sign. Yes, just like in any other fields, there are people in crypto who create a project just to get investors' money, but not to complete the project and bring you profit. Find out how long the project has been in development. If the project has been in preparation for several years, pay attention to whether there have been additional investments recently. If yes, it is a sign that investors believe in this project. In principle, this is a common situation because at different stages, investors are ready to give different amounts of money to the project. The further a project develops, the more inflows it attracts. But if there is no news and inflows from the project for a long time, then think several times before investing money in it. You can check the project activity information on GitHub. Usually development teams try to share news about their project there. The other fifth point: who is at the helm of the project? Experienced businessmen or charlatans? How much money have those people who promise you profits already made for investors? Most projects open for investment provide data on how much money is needed for specific tasks and how much previous investors have already brought in. You risk several times more if the project doesn't have good cases. It's pretty simple, but for some reason many people don't check this information, lose money, and become disillusioned with crypto and investing. The sixth point on the investor checklist is to find out whether the project is on the government's radar. That is, whether there were ICO or other public sales. The mere fact of such sales is a bad sign because ICOs are regulated by the US Securities and Exchange Commission. This means that there is a high probability that the project will have big problems such as huge fines. The seventh and very important point is whether you were quick enough to get seats in the best rows. In other words, you need to know at what price the fund gets one token. For example, if a fund received coins at 1 cent and the asset is now trading at 3 cents, that is a good entry point and a good time to buy. And if a fund got the coins at 1 cent but sells them for 25 cents, it is better not to buy that coin, as the chance of the coin going up in value several times over is already much lower. And finally, the eighth point on our checklist: the hardest part. I call it to read the blueprint of the project. Let me give you an example. In every city, a new building is built now and then, and it has to be checked by the state before it's allowed to let people into it. Imagine you are checking a new home or shopping mall. You need to know what emergency exits the building has and whether there are enough of them for people, what its fire safety is. Are there enough surveillance cameras, alarm buttons, and so on? All of this can be seen in the blueprint. This is exactly how you should check a project before investing. You need to figure out what the tokenomics of the coin are, what the token unlockings will be, and what the total emission is. In simple words, how many tokens will be issued in total when they will all hit the market, who are the token holders, teams, funds. All of these indicators need to be analyzed together. For example, if 1 million tokens are issued, but most of them will only appear in the market in 2 years. So if you get your hands on tokens early, their value can go up a lot. The fewer tokens in the market, the easier it is to grow the price upwards. Therefore, it is beneficial for you to invest in the project exactly at this moment. So if you have watched the video up to this point, I can sincerely congratulate you. You are really persistent in your desire to figure out the finer points of investing, and that's a great sign for you. Stay alert and keep learning. I recommend you a video on how to avoid 90% of crypto newbie mistakes, and a video on how to choose the best tool to keep your investment portfolio safe.